SEC Chairman Mary Shapiro is proposing tougher rules on money market funds, and she hopes to reduce the type of risks that would get these money funds into perhaps the same kind of situation, the trouble that many of them went through during the financial crisis. But many mutual fund companies say this plan would threaten the nearly $3 trillion money market fund industry. For some insight, we're joined now by the head of one of the country's biggest investment managers, Federated Investors CEO Chris Donahue. Welcome to InBusiness. You are very concerned about this push by the SEC, and you have said that you would sue in response. Where do your efforts to lobby against it stand now?
Our efforts today are centered around good policy, and good policy means protecting good products. The money market funds have been offering for almost 4 decades great short cash term management service to individuals, to treasurers, to government entities, paying probably hundreds of millions of dollars more than they would have gotten in banks. And so our efforts are to speak on behalf of these customers and these funds for continued good policy, namely the continued efforts to make money market funds a viable and beautiful part of our financial system. Well,
the flashbacks that many have are what happened during the financial crisis, right? When you saw one of the funds, the reserve primary fund, go under and then froze things up. What exists now to prevent a situation like that happening again without the SEC intervening?
Well, the first thing I would say is that that was not exactly what happened. You had a 18-month deterioration in the commercial paper market, and the commercial paper markets were already frozen up. Then you had the Fed decide, after printing a lot of money, to bail out certain people and not take care of others. And then Reserve Fund got caught owning and thereby broke $1. They did not fail, they broke $1. And now your question is, well, what has happened to prevent that from happening? A number of things. There were some very, very good, complete, and proper regulations passed by the SEC in 2010 that enhanced the liquidity, the maturity, know your customer, stress tests, etc., that enhanced money market funds and got them through an array of crises in the middle of 2011, whether the U.S. would lose its AAA rating, the debt ceiling, all the problems in Europe. And then you add to that all of the work that's been done coming out of Dodd-Frank on strengthening the overall banking system. And within this context today, you're at a position where money market funds are required to have 30% of their assets available on a weekly basis, when back then it was a 15% redemption that was the source of the problem. So you have done a lot of things better in order to make this system work and thereby prevent these things from happening again.
Well, let's break down exactly what the SEC is asking for here. Among the proposals is the idea of dropping the fixed dollar a share net asset value that money funds maintain each day. They say it would give you a clearer picture of what's actually happening and the real value of a fund. Why do you think that's wrong?
Well, I think it's wrong. First of all, they do have a clear picture of the fund because we publish what's in the portfolio on a regular basis, send the SEC stress tests and important facts on the fund on a regular basis, and make that information public. We are the most transparent investment vehicle I know of. And the reason that we are opposed to that is because it destroys the essence of a money fund, which is daily liquidity at par. And it does so without a justification, without a cost-benefit analysis, and only with what we think is repeating certain fears that they have that are not realized. Now, if the standard is that a money market fund has to be perfect, then no money fund will ever reach that standard. And the President's working group said that if that were the standard, you would get draconian results. And that's what we fear would happen, because we know that it would end the money market funds as we know them.
All right, we've got to leave that conversation right there. It's an important debate, and we're going to continue to track it. Thanks for making the case. Chris Donahue there, Federated Investors.